Welcome back, Flare community. I hope you're all well on this fine Tuesday. And yeah, it's going to be a little bit different today. There is going to be a Spaces over on X that I wouldn't mind listening to. And I thought, why not just start it here? And maybe we can have a good old chat in the live chat and, talk about what's being discussed. We've got Jeb in the house. We've got Crypto Deegan. We've got Michael Brown. We've got Corey. We've got Master Blaster. And Corey's asking, is 5,000 FLR enough? Well, who knows? That's very subjective. But if you are watching this at a later date, please feel free to jump to the timestamped section below when we get this show on the road. The Spaces is due to start in about 3 minutes time. And this is what it is. It's from Proof of Talk. And they're having a chat with Stephan, who is the CEO of BitMEX, and Hugo Phillon, who is obviously the co-founder of Flare Networks and Flare Labs, and it's going to be hosted by Megan, who is part of the Proof of Talk founding team. They say don't miss out on this insightful conversation, which will revolve around the changing ecosystem and how innovation and investments are shaping up. So I'm pretty interesting. Wow, Michael, it's 5 a.m. there. Wow, sorry to keep you up, brother. Like I said, it is recorded, but I am glad that you're here, regardless. If we look at the Proof of Talk, I guess, account here, this is actually an event over in Paris. So this is happening on the 10th and the 11th of June, so not too long away. I guess that's in maybe 3 weeks or so. And Hugo is actually going to be a speaker at this event. So looking forward to listening to that. Hopefully they're recorded as well. Wouldn't mind listening in. And if it's live streamed, you can bet that we'll be doing it here as well, because I think it's really nice, to listen and chat amongst ourselves while we listen to what Hugo is saying, see if there's any nuggets that are being shared. And yeah, we'll see what happens. Rob G, will the space be on here, YouTube and Twitter? Yes, so it's happening on Twitter and we're live streaming it here so that we can chat as well. So it is due to start in about 1 hour. In about 1 minute. Wow, that would be early if it was in 1 minute, but keep my eyes on this. The reminder is set. It's 10 a.m. here in the UK. Did have some great news actually, just on a bit of a side note that I'll be expanding upon later. USDX will be the first native-backed one-to-one USD stablecoin on the Flare network. This news just broke less than an hour ago, so stay tuned for that. I'm going to be talking a little bit more about that in the near future. Let's keep our eyes on the notifications so we can keep our eyes peeled for this space going live. A bit of a refresh. Since you get the reminder, it should actually just appear on the notifications. Stay tuned. 6 a.m. in Florida. Wow. Early bird gets the worm. That's what they say, right? Seen as bullish. Love it. Right, let's see. And again, guys, if you do notice that the audio is not maybe too quiet or too loud, please do let me know and I'll get that fixed ASAP. Ori, bit of a late one for you. 10 p.m. in New Zealand. On a Tuesday as well. Yeah, this is really good news. First native stablecoin. Native meaning that the issuers, Hex Trust, are the ones that are creating this. It's an asset that's being created and not being bridged, right? So just bear that in mind. Yeah, thank you, Jeb. I was more referring to the audio once we get the stream going, this X space, because that's something that needs to be balanced. But I think we've got it pretty nice. Just let me know if it's a bit too quiet. I can happily fix it. Here we go. We're going to start listening. And of course, I'm going to be quiet as this is going on, but I will be, in the chat, and hopefully I'll be listening to some nuggets. We can see what we can find, but let's join and let's see what's going on here. It's filling up pretty fast. So see that they're currently muted, so we'll just wait for them to get the people up. It's going to be Hugo. Who else did they say? They've got Stephan from BitMEX, one of the leading derivative exchanges since 2014. Wow, it's a bit of an OG. Here we go. See Hugo just to be invited up. I'm pretty sure that the show is going to get started. So, like I said, let's listen up and see if there's any nuggets that are going to be found. I'm pretty intrigued. I'm pretty sure Hugo is going to be talking a lot about the FTSO V2 update that is now an actual active proposal over on the Songbird network. And maybe he talks a little bit about this new stablecoin that's just been announced. So let's see. Excuse me. Do a cheeky wave and a love heart. Why not? Happy Tuesday. Yes, Corey, don't forget to subscribe, everyone. Really does help the channel. And of course, it's free. Goes a long way.
Welcome to the show, everybody. We are just going to wait a few more minutes while we're bringing our speakers up on stage. Today is going to be an amazing session, so just give us a few more minutes as we bring our speakers up, and we will get started very shortly.
You heard it from the host herself. That's Megan. Looks like we're going to be starting very soon. Still see Hugo there as a listener. So we will see. Web3 dialogue with Flare and BitMEX. You know, they could even, it's interesting that they've got two people here. And I know Arthur Hayes, who was maybe the previous CEO of BitMEX, he actually, or his company, wrote an article about this. About the Flare network and comparing various oracles within the space. And, I guess we could speculate that maybe there is some ties there, and maybe BitMEX plan to list FLR. Maybe that's going to be a bombshell they drop today. Again, pure speculation, but who knows, right? It's interesting that they're bringing two of these behemoths together. We've got Hugo Phillon and Stephan, sorry, I was saying Stephen earlier, but this is Stephan, the CEO of BitMEX. What do you think, guys? Is it a chance that we hear BitMEX announce support for FLR? Only time will tell.
Okay, everyone, we are going to get started now. Thank you so much for being here as we wait for, okay, I see Hugo just joined as a speaker. So we are ready to go. I want to thank everybody for being here today. My name is Megan Nilsson. I'll be your host for today on behalf of Proof of Talk, episode number 3 of our X Spaces leading up to one of the most anticipated Web3 events of the year at the Louvre Palace in Paris on June 10th and 11th, gathering industry leaders and decision makers to propel this industry forward, discuss important things happening now in the atmosphere of crypto and everything that's important for the future. So we want to thank you guys again, Hugo and Stephan, for being here, for having flexibility with your schedules. We had to change to today. So we're just so excited to have this conversation now. And I just want to now welcome our esteemed guests for today. It's a real honor to have you both on, and we will get started. We have Stephan, sorry, just waiting 1 second while we get something together. We have Stephan Lutz, who is the CEO of BitMEX, and also Hugo Phillon, the co-founder of Flare. And we are so excited to have you both here today. Welcome to the show.
Hello, nice to be here.
Thank you for having me.
Yeah, we have a lot to discuss today. I think what we can get started with first is, for everybody who's on the spaces now and like more information, maybe don't know so much about Flare and BitMEX, what's going on, let's give some brief intros and what you guys are looking at right now, what's most important on the agenda right now for each of you regarding BitMEX and Flare.
Sure. If okay, I'll start. So I'm Stephan, I'm the CEO of BitMEX. BitMEX is one of the oldest crypto exchanges out there, actually the inventor of the perpetual swap and the whole market infrastructure and design about trading crypto derivatives. We've been live now for 10 years. We've been through all of the crypto cycles and Web3 cycles so far. We basically have been a bootstrap company. So we have no external funding, and we have been quite successful, especially with our main product, the perpetual swap, which still is one of the most liquid traded products out there. And it's even the most liquid traded product out there for the BTC margined contracts at BitMEX. Next to it, basically, BitMEX was founded on the, let's say, rubbles of the Mt. Gox fallout. And our founders wanted to make sure that something like this will never happen again. So they placed a high emphasis on security and safety. So that led to the invention as well, and has been copied by basically all of the legit competitors in the space, the so-called insurance fund mechanism, which protects traders' profits in a swing scenario. This is one of the biggest we still have. I think we have the second largest insurance fund in the industry. And we have a wallet system that so far, I mean, knock on wood, has never been hacked. We've never lost a coin. Next to it, we never commingle funds of customers in the house. So we all treat all margin balances separate, and we don't reuse them. We don't rehypothecate them. There is nothing with it other than using it for margin for trading. And we place a lot of emphasis on that, as we provide a proof of reserves, proof of liability statement twice a week that can be done by any trader who has funds on BitMEX. And we even provide historical data for that. So we store all the data. That means you can see, or you can come up with your own historic analysis on that to see whether something funky happened in the past. So that's basically BitMEX. So we regard ourselves, I mean, yes, of course, crypto in the early days was a little bit different, it evolved, but nowadays, and for a couple of years already, we see ourselves as a neutral exchange. We don't run an own market making desk. We don't trade against our customers. We are fully neutral, a peer-to-peer exchange. We are safe, we are secure. So in a way, we say we provide the fighting pit for anyone who wants to get into crypto trading, and especially trading crypto derivatives. That's why we're here, and basically looking forward, our main goal is to bring that again to more individual people. So we are very institutional heavy. 70 to 80% of our volumes are institutionally driven. But as crypto and Web3 is something for the people, we want to make sure that more financial literate, of course, because derivatives is something quite special. You should know what you do, but that more individual traders will join the platform as well. So we're working heavily on UI, UX, making the experience better, introducing social trading ideas, copy trading, bot trading, but it always needs to be safe and secure for our users so that you get what you want, or basically at least you get what's on the prescription. So our documentation is publicly available. There is nothing hidden. That's what we're working on. That's what we're looking forward to. And actually, this bull run that already runs since March last year, from our point of view, is developing very well, and we see a lot of more professionalism in the crypto and Web3 space, which is nice.
Wow, thank you for the insights as into what BitMEX is doing now, and I certainly agree that the industry has matured a lot. You know, the approval of the Bitcoin ETF has um, introduced a lot more institutional play, as well as the quote unquote blessing of the authority in that way has got a lot of more traders, institutional traders involved as well. So what I really love is that you're very focused on security. You say the wallet's never been hacked. There are no commingling of funds. After everything that the crypto space has been through, these things are obviously essential, and that it's a neutral exchange seems to be quite a bit of advantages. So that's really interesting to hear, as well as BitMEX has been on my radar for a very long time. You guys have been in the space for a long time, and you've also been thought leaders as far as a lot of the things that have been happening in the crypto space. So I really appreciate having you here on the spaces today. So thank you for that, Stefan. And Hugo, we'd love to join you to the show as well.
Hi, thanks for having me. Nice to meet you, Crypto Megan. So Flare is a layer one EVM platform, and it's special because enshrined into the blockchain are data acquisition protocols. So we assessed the Oracle landscape within crypto. We looked at all the various oracles, and we didn't like the way they worked. We thought they had, elements of centralization that were sort of unnecessary. Um, Elements of control, not enough participants, especially when you get into, slightly less popular various different streams of data. In some of the existing oracles, as soon as you get out of the most demanded streams of data, you really have very, very few providers, which massively increases centralization and increases the risk that anyone using those signals is taking. And we've seen with various protocols, not to call out names, but we've seen where they have, either missed updates or printed the prices that have not been accurate against the market. So we set out to build a blockchain where the blockchain is involved in actually being an oracle, rather than having an oracle put on top of it. And this means that Flare, in addition to being a blockchain and doing the standard validation for blockchains, it has two main protocols that do three main things. So the first is a price oracle that we call the FTSO, and that's recently been upgraded to FTSO v2. So that'll be able to handle 1,000 price series updated every single block. Then there's something we call the Flare data connector, which is essentially two protocols in one, which is the ability to prove from another blockchain or from a Web2 source like a Web2 API, and, sort of arbitrary data every 90 seconds. So a proof might be, in that example, a proof might be that I can prove that something happened on Ethereum, something happened on Solana, something happened on a Cosmos-based network, something happened on any of the chains that Flare connects to. So we're a blockchain. We have our own data. That data is cheap or free. And that is an extremely desirable thing if you're building in DeFi because there's very large amounts of data. Flare is inexpensive. Flare can also serve that data to other ecosystems, creating essentially a revenue stream for the network itself, which is a very nice thing to be able to do. We're very, very busy building out our DeFi ecosystem as a foundation. We just announced today that Hex Trust, a Hong Kong-based custodian, is issuing a US dollar-backed stablecoin as the first native stablecoin on Flare. And together with that, a protocol called Clearpool will be the first real-world asset protocol on Flare. And that will allow you to take the Hex Trust stablecoin, the USDX as it's called, put that in Clearpool, which effectively means you're lending your dollars out within the protocol. Those dollars will be invested only in US treasuries, 1 to 3 months treasuries, so extremely safe. And as a result from that Clearpool protocol, you get a token back called CUSDX. And that essentially is essentially like having a treasury certificate on chain. And then that then feeds into the Flare's DeFi ecosystem, but also into trustless bridges that an affiliated company of Flare called Flare Labs is building. And those trustless bridges allow us to bridge things like Bitcoin and XRP and Litecoin and Dogecoin to Flare with far, far lower risk and far more in keeping with decentralized philosophy. So those can be bridged to Flare, and the USDX and the Clearpool essentially treasury token will be a core part of the collateral for the F asset system when it launches. So Flare is, in brief, EVM layer 1 blockchain, its own data protocols, building trustless bridges, has an emerging DeFi ecosystem, and looking forward to serving Bitcoin, where the Bitcoin DeFi has become a really big thing recently. So I think there's a fantastic opportunity there for Flare to really shine, and looking forward to serving the other communities such as XRP that are heavily involved in Flare.
Well, that's very interesting to hear all the innovation happening on Flare now. I know you've referred to it before as kind of scalable data provision, which I find also very, very interesting. And that you're opening up to other networks with trustless bridges, which is a huge pain point in crypto. So these are all very necessary additions and innovations going on now. So I'd love to hear more about those in general, and also the decentralization aspect. One of the things we'll be talking about on today's space is the decentralization versus the necessary, or whatever the opinion may be that Stephan has of the necessary element of centralization in certain cases. So we will get back to that, but thank you, Hugo, for the updates on Flare. And as we go forward now, as we go forward, what I'd like to do before we get all into that is address maybe what everybody's thinking about today is that we had a massive breakout from Ethereum and from Bitcoin as well. We seem to be gaining momentum on the backs of some speculation that now Eric Balkunas, the ETF specialist on X here, has said that the odds have increased for the spot Ether ETF from 25% to 75%, and hearing chatter this afternoon that the SEC could be doing a 180 on this. So now everybody is scrambling and trying to figure out what's happening as Ethereum's breaking out. And also in general, if this could be happening, or there is the potential that it happen, what could that mean for crypto as a whole? Now that the SEC is suing, all kinds of different organizations and trying to prove that ETH is a security, if they change their stance on that, that could potentially open up more avenues for the crypto market as a whole. I'd love to get both of your opinions on this as we continue in the bull run, and we seem to be at a very important inflection point in the industry. So let's start with you, Stephan. What is your opinion on this?
Yeah, sure. Well, in my role anyway, I'm pretty happy about the news if they prove correct. And what it does to me, or for me, is the following. It proves that crypto and Web3 actually is on its way to becoming a mainstream asset. And the whole discussion around, Bitcoin is not a security, at least not for the SEC, that has been already stated. And the whole discussion of whether one thing is a security or it isn't is more, in the grander scheme of things, just irrelevant. Because in the end, the industry and all the investors, they will deal with it. And we can, it's not forgetting around it. It's more like dealing with it in a professional way. For me, actually, ETH is not a security. I wouldn't know where that should come from, because there is no promise in terms of getting something back. And actually, you don't really own something. It's closer to something like Bitcoin than it is to a classical security or a securitization. But that's just my personal opinion. That's of course to be debated. But what the probable, or now even more probable, a granting of an ETF license for ETH does is it opens up this universe to people who wouldn't touch crypto directly, right? So it's an indirect channel. It's for people that say they want to stay with their, as the Bitcoin ETFs actually, that want to stay in their TradFi world and TradFi universe. They don't want to buy it directly, but they still want to be exposed to it. That's number one. Number two, what it does is, even for crypto natives, I wouldn't go personally too much into those ETFs because they're overly expensive in terms of management fees compared to buying it outright and storing it, for example, on a ledger device or in my own wallet. So it's a little bit like a matter of, and we touched that when we speak about decentralization later, it's the same thing. So maybe not for me, but if you want to keep part of your crypto exposure in something that's relatable to the fiat world, then ETFs really can play a role here. Because ETFs basically are kind of a fiat rail to the classical TradFi world. So it might be interesting if you're a larger investor that even has direct crypto exposure like Bitcoin, Ethereum, and then there will others will follow. To have part of that, I mean, not the majority, but part of that, basically in your portfolio, because it's easily convertible into fiat, even for millions and millions of notional, which if you have millions and millions in Bitcoin directly and you want to translate that into fiat currency, it's a little bit more difficult to do so. So it serves two purposes. Opening up to more investors, which means there is a higher demand for the same or stable supply side. This drives prices, and the expectation drives prices. Second one is that's accelerated by the point that if an ETH ETF will be approved, the likelihood increases dramatically that ETFs for basket crypto ETFs or for other underlying crypto assets will be granted at a later stage as well, which then even opens up the universe even more so. And the third one is even for crypto native investors, let's say the whales in the industry, it might be even beneficial to hold some of those ETFs as kind of a fast track or accelerated track into the fiat world if they want to do that. So it's quite interesting. I'm excited about it, and I'm looking forward to that additional professionalization of the space here as well.
Thank you for that synopsis. Very thorough synopsis. I would agree with you that, you know, these fiat rails, I like the way you put it, they're essentially fiat rails and regulatory guidelines for people who don't want to invest in Ethereum, maybe like me or many people like me in the industry that prefer to just buy and hold ETH on our own in a decentralized way. Many people can't do that, especially institutions. And so this opens up certainly a giant flow of liquidity. But what would you say, and also a testament to the industry maturing as a whole, absolutely. And then after the ETH ETF, if it is approved, that will most definitely open up the conversation for other coins in the ecosystem. But as far as the regulatory headwinds, I mean, we've got, it seems to be the sort of anti-crypto army collapsing a bit. I certainly agree with you that Ethereum is not a security. I think the Howey test, you know, it was invented, 70 years ago, and it should probably not serve for new technologies as we need to come up with new regulatory guidelines. But what do you think that means for regulation in general? Are we seeing the collapse of this sort of anti-crypto army? Are we starting to catch, like, is the current administration trying to pivot as quickly as possible as they see there is a demand for more pro-crypto regulation?
Okay, I'll take that here for a starter. I belong to the people who'd rather mute this let's say, this antagonism or so. Yes, I totally know what you mean. I would frame it slightly different. I think what especially in the US, the administration now sees is that they got themselves, and you can argue whether it's for the right or the wrong reasons. I mean, I'm on the crypto side, so you probably can derive my own way of thinking. But taking it very neutral, that they got themselves into a dead-end street, even if they have done so on a well-meaning note, well, that's TBD. But even if so, they got themselves in a completely dead-end street, and they now need to go back to a more, let's say, neutral approach to something that is somehow okay with what we call like the rule of law, right? So same rules for equivalent things. We have seen something like this that got completely out of control in the last years, from my point of view. I mean, I'm not the hugest fan of it, but the ones that have gotten it most correctly so far are the Europeans. I mean, they are over-regulating from my point of view, but at least they are relatively neutral in their stances. They are not going in like dogmatically against everything. In the US, it was a dogmatic thing, and I guess we see now a normalization of that. And I hope it will continue, because that is beneficial for even the old TradFi system, because it can start overhauling itself, and it's for sure good for the crypto system and for the crypto ecosystem, because we will be able to provide more and more to more people, which is actually what crypto originally was about. It's giving power to the people.
Yes, thank you for that. Yeah, power to the people, more access essentially, and some kind of regulatory guidelines so that people don't have to build in the dark, so that there's some kind of clear boundaries that people understand going forward that they can build within and invest within. So, yeah, I would completely agree with you. I think it's important that they kind of pivot in their stance. As you said, maybe they didn't intend to, maybe they did, but it turned out to be a pretty anti-crypto stance in to many, the way they saw it. So, it could be interesting to see whether the ETF gets approved or not. I believe the date for that is Thursday, and whether it gets pushed back, but certainly, interesting times indeed. Hugo, I'd love to get your perspective on everything that's happening and potentially, on the political side as we kind of wrap this talk.
Hello, can you hear me? Just checking I can be heard because you trailed off at the end there for me.
Oh, yes, we can hear you.
Awesome. Um, I guess I echo a lot of Stefan's sentiments. Um, I think the ETF is interesting because obviously it allows large funds that are heavily restricted in what kind of instruments they can invest in to get involved. I think the more interesting thing for me, I wouldn't bother holding crypto through an ETF myself, but I'm perhaps a bit too crypto native for doing that. But I think more interesting thing is if there is a change in attitude towards the environment. I have a huge amount of sympathy towards regulators. Um, they get presented a regime. They also have careers. They're people with careers. That they want to preserve. They don't want to, do something that is heavily contested. Uh, Inaction is usually the best aspect of a politician's career because it means they don't have to take much risk. And at the same time, crypto has been completely rife with scams. That said, it's very clear that there are a number of tokens out there, many, especially the larger tokens, that have been handled in a responsible way. And even if they did start out as securities, which I'm sure some of them did, have certainly ceased to be. And Ethereum would definitely be in that camp. So I think it's interesting. I think Europe's got it broadly correct. I think the Middle East, or at least the United Arab Emirates, has put in place a good set of regulations. You can go and talk to the government there, which is quite nice. I think the biggest flaw that we've seen with the development of the industry has been a desire not to do anything, a desire not to change any rules or make any new rules or really provide a way for people that want to build in the space to get certainty over over how they can build without contravening rules. I suffered the same thing when I was in the UK. There was not effective tax advice as to how the company that Flare is part of would be treated. So we had to leave the UK lest we end up with a tax bill that we couldn't pay. It's a huge problem to have essentially people that are uninterested in the space in creating essentially regulation through precedent rather than regulation through government. Um, if this signifies a breakthrough in the political consensus in the US, it'll be an amazing time for crypto. I'm not sure it does. It's just one analyst that thinks that the odds have gone up from 25% to 75%. But at the same time, it would be lovely to think that that's the case.
Yes, I would completely agree on that. It would be a huge kind of, like I said, we're at an inflection point now, and what people want are just clear guidelines and boundaries. Like as you stated before as well, you had to leave the UK due to the uncertainty of the laws that were being developed, and also I love what you said about regulation through precedent rather than through government. It's essential that there's an ongoing conversation. I know I'm also based in Europe, so I would agree with both of you that although evidently the framework is not perfect and there's a lot of things to work on, at least they are coming up with regulations. They're attending all of these conferences. I'm sure there will be people at Proof of Talk as well, government officials, and just actively trying to understand the space and put the best guidelines possible forward. So that is truly going to be interesting to see how this year plays out, as well as the elections. I'd like to pivot the topic now and go back to the importance as we mature as a space, as we have new people coming in, both institutions and retail, and we're trying to improve the infrastructure for that. The difference and the importance between certain aspects being centralized and other aspects being, the core principles of Web3 and crypto, which is decentralization. How will that interact and coexist? I've always thought it'd be somewhat of a hybrid approach in order to bring those new people on, or else it's going to maintain a very closed society and very difficult for new people to come in. So this question we can start with you, Stephan. As you know, sexes are being closely watched by authorities, and the SEC is going after CZ. And in a recent debate, I know you discussed the role of centralization in Web3. And we'd love to get your views regarding the necessity of centralization for certain aspects of the ecosystem and how it aligns or conflicts with the core principles of decentralization in this space.
That's actually a great topic and say source of good discussions. So, but to keep it short and concise, we at BitMEX believe in the coexistence of centralized and decentralized models in the crypto and Web3 space, that it's even necessary. I mean, not necessary as a natural law, but necessary in terms of what people want. I come to that in a second. And the second one is what BitMEX always was about, is being a centralized exchange, of course, but following decentralized, let's call it principles. What do I mean with it? I want to touch that first. It's, as I stated in the beginning, so we have proof of reserves, proof of liabilities, right? So we even in the beginning of BitMEX, I mean, we still provide that, but it was pretty clear because we used vanity addresses. So if you had a blockchain explorer, you could very well follow what's going on BitMEX. So if you are a crypto native and you are interested and you want to spend the time in following up, you could see everything we do because we're a 100% crypto company. We're not touching fiat. We don't accept fiat deposits from our customers. So we wanted to be that, let's say, centralized service provider that operates in a pretty transparent mode, right? And this is what we still do. The second thing is we wanted to originally, I mean, the credit goes to our founders, not to myself in my role right now, but they wanted to open up crypto trading and legit crypto trading to a lot of people. And this is what they did and what we are still true to. Yes, we want to be 100% compliant. We follow sanctions regimes. We follow KYC, AML, basically better than any bank. That sometimes limits the ability of what we can do. But we think it's necessary to balance those two. But in the end, we make sure that we have, let's say, the traditional people on our platform as well as the new people. And the third one is the idea of the perpetual swap itself is basically creating something that's a financial lookalike of a spot transaction, but it's in derivative in nature and therefore much more cost efficient. So trading fees are much lower than in spot trading. So the only thing where spot trading really is relevant if you want to hodl, right? If you want to physically have the asset, of course you should buy it outright and you should hold it in your wallet basically, and hopefully you do self-storage here because that's the most secure thing you can do as an investor, right? So if you then use part of that as collateral on our exchange, and this is just necessary, you can't trade derivatives without collateral, because it's basically to make sure that the winning party of any trade gets his or her money. That's what it's about. It's often misunderstood what it's for. It's just for that. That's the reason why you need collateral, right? But anything else, we don't use it for something else. So and we are true to that. So it's a little bit like, yeah, we are not a decentralized exchange, and we probably never will turn into one. But we try to give as much transparency to our users, to be as open as possible. We are approachable. I mean, here, on X, you see my handle, but we are on Telegram, we are on email. People know even where we live and where our offices are, so we are approachable. We're not hiding. which is not quite a decentralized feature, but it is true to those characteristics or that things that you want to achieve, right? You want to make sure that there is a feedback loop and that users are involved in that. So that's BitMEX. But why do I believe there is coexistence and not an either or? I think centralized and decentralized service providers in the crypto space both are needed. Why? Yes, crypto Web3 in the end is giving power to many people. And that should be always at the core of what people think about and what they build and the use cases they put up. At the same time, the stuff that you do with it is usually not something that you do 100% of the time in your life. So, for example, even for me as a trader, I trade crypto derivatives, I trade spot, so physical coins, etc. But I don't do that like 16 hours a day. So for certain things, I feel myself equipped to take full responsibility. So that slogan, that former slogan of being your own bank is a nice slogan, and I love it. I mean, I come from the banking industry, and I love being your own bank. But frankly, I have been a banker all my life. I even work with regulators, so I know pretty much how a bank works and what it means to be your own bank. But not everyone can do this. And not everyone should do this. This is inefficient because then I would need to be my own bank. I would need to be my own DAO. I would need to be my own exchange, right? I need to know everything about it. And it's just not feasible in everyone's life. So for certain aspects, users might opt in to give a little bit of their power and their influence to centralized bodies because they provide a service, right? So in a decentralized exchange, it's a little bit harder to get, let's say, a resolution of conflicts, to get someone from customer support, to speak to, I mean, it's not on me, right? It's not I as a person, but to someone like me in the organization. So that means if you want to go fully decentralized for everything you do financially, even if you stay in the crypto space and you don't go to fiat, it would mean you need to know all the protocols that you engage with. You need to basically follow on a daily basis for a couple of hours a day of what they do to make sure that you figure out if everything's legit and all right. This is what the whole thing is about, but not everyone can do that. Not everyone should do that. I mean, that would be as requiring everyone who trades crypto derivatives in this world is a professional exchange trader and who knows on top of it how the protocols work that they trade. Because if you trade Bitcoin, you need to know the protocol. If you trade ETH, you need to know the protocol. If you trade something else, you need to know the protocol to make sure that you get the data you need to follow up and to see whether this exchange is legit, right? Plus user experience. I mean, if you have a centralized exchange, there are detriments and there are downsides to it. I don't want to play that down, but the pros are actually if there's something wrong, it can be changed pretty easily based on customer feedback. Whereas if you are a purely and truly decentralized organization, you need to use the consensus mechanism, which is in the end something that I value very much, but you need to be sure it takes longer than just a management decision. So that means in the end, for me, that's my true belief, we will still see, even in the very, very end, still centralized exchanges and centralized players who provide certain services in the crypto world, and you will have their decentralized lookalikes for that. Which provide actually the same service, but on a different matter. It's a little bit, if you go to the corporate world, you have stock corporations and you have cooperatives, and you have both of them providing the same service. It just depends on how your ecosystem works and who are your customers. Are those customers who want to have a service, or are those customers who want to have a say in what's going on? If you want to just buy a service, you probably will land in the end at a centralized service provider. If you want to have a say in how it's going to be run, you probably go for the decentralized solution on that. So I guess in the end, there will be more decentralized players or decentralized volumes in the cryptos and Web3 space than centralized ones. But in absolute terms, even the centralized business models still have room to grow.
Oh, thanks for that amazing explanation. I like that you kind of put it out on a spectrum of different use cases, different users, and it is inviolable that like all of the people coming in are going to want to completely control everything. It does take a long time to get to know all of the different protocols, as you say, and that's not feasible for the average user that wants to come in and potentially not even hodl, like you said. I believe it's very important to be your own bank, to have your own crypto and your own self-custody. But there are certain services, I really love how you explained perpetual swap, the financial lookalike as a spot transaction. If you're keeping those assets on the exchange anyway and the fees are cheaper, I think that was a really interesting explanation. And, that there is this hybrid use case for those that want to just use it as a service, keep it easy, understandable, and mainstream, while the rest, there's always options and improvements and innovation happening. I know CZ, a while back, he said that his vision was that all centralized exchanges would become completely decentralized, and that's where they were headed. But I think that, some sort of hybrid is probably necessary, especially for the fiat on-ramp side of it and for the new users. So thank you for that. And I'd love to go to you, Hugo, to see your opinion on where this lies, because it's a very important topic. Stefan was also saying decentralization is a core principle of Web3. And I'd love to give your viewpoint on this.
Sure. Yeah, I mean, I see it a bit like, specialization in factories. When you had artisans making chairs and pots and various things, they would do all the processes themselves. So they would, cut down the tree, cure the wood, um, do all the various aspects and end up with a final product that is a chair. And that's an incredibly inefficient process. The modern factory came along and it segmented each one of those things. And you have a parallel really in the banking industry where, a couple of 100 years ago or 150 years ago in the US, each bank would issue its own version of a dollar. So you'd have a local dollar, a local dollar related to a particular bank. And the banks, the people that were holding that dollar, essentially, if they wanted to be safe, they had to think about, okay, is the bank safe? Do they have enough capital? And you used to get bank runs all the time. And then, the federal government came along and it kind of created this system of security, so the FDIC insurance, all that kind of stuff. And that meant that, the day-to-day average person didn't have to think that much about their money. If it was in one bank or another bank or a third bank or an eighth bank, on the whole, it didn't matter so long as they had less than 250,000, I believe it is today. Their funds were insured by the federal government. That process, like all processes, went way too far. Where essentially you could never escape the system, and the freedom goes away, and then you end up with four banks or three banks, three global massive banks, and you become essentially a feudal peasant in relation to the banks, and that's what crypto has been trying to address. So it's obviously going to be a hybrid system for as long as we still use any form of fiat, and that is the day-to-day payment mechanism, because you have to have off rails, on rails and off rails. But at the same time, I think that the blockchains are never going to be as fast as a centralized system. It's just not possible. They're probably never going to have as good UI, even as account abstraction gets better and everything gets better. They're probably never going to have as good user interface. So, I think what crypto is about is the ability to essentially, have a choice. And this choice was very starkly made clear to me in, I think it was January last year, when Silicon Valley Bank and Silvergate and all that lot started going down. And we as a crypto company, we really only had very few options as to where to hold our fiat. And we have to have fiat because we have people that we pay, engineers and such, and they need to be paid in a currency that they can buy food with. So we were faced with a choice, and we were our capital level was far beyond the insurance level. So we were thinking, well, what the hell do we do? And we didn't have another bank at the time, so I shoved it all in Bitcoin because it was the only option available to me, really. I just sent the money to a broker and bought Bitcoin with it, and we were quite happy with that decision because Bitcoin was about 17,000 at the time. It's now about 70,000, so that was good. But crypto is about optionality. It's about when the system starts to conspire against you, and BitMEX is a good example of a responsible player. There are several other exchanges that are responsible players out there, but you can't be guaranteed that they'll be responsible players forever. And if they start to conspire against, the people, then crypto offers you the escape valve. And really, it's the first time in the last, very, very long period of time that there has been an escape valve, because gold is not an adequate escape valve.
Wow, I love the analogy you used about the banks and having an option. And that is essentially what crypto does. It allows you to opt in, opt out, or have somewhere in between where you're in control of what you do, regardless of what path you choose. Those responsible players are certainly very necessary as we come to the sensitive point in the industry where we are getting a lot more people involved. We are maturing, and we need that kind of transparency and dedication to continuing to strive for the best possible solutions. So, and also on the bank run, when that happened, I think, nobody expected what Bitcoin did. It surged about 30%. It seemed to be a response to people reacting to this problem. And I don't think it'll be the last of the bank runs. I know we did a spaces here on Proof of Talk with Tim Draper in some previous episodes, and his vision is, quite extreme in that he thinks that everything will eventually evolve around toward a completely Bitcoin or crypto driven economy, and that will pay with crypto, and that will be the base case, and that we better flock to these assets before the banks come down. Now that's, maybe some way out from happening from now, but like that is a really interesting use case that you give, is that people should start preparing or think about that thing. And it is an interesting escape valve. And we have that option if we want to have that option. So I think that's all really good points. We're going to transition the topic now. If you guys have any questions, please feel free to leave them in the comments below. As probably we won't have time to bring speakers up, but we would love to address those questions. And don't forget, we are coming closer and closer to the actual Proof of Talk event in the Louvre Palace in Paris on June 10th and 11th. We would love to see you all there. We'll be continuing these meaningful conversations with industry leaders like Stephan and like Hugo. So please do comment below if you do have questions. And I'd like to transition now to the last topic, which is involving AI. And actually, Hugo, I watched your presentation at Token 2049 in Dubai recently, and you were discussing a lot on use cases and how there's a ton of underlying tooling, potentially infrastructure, but not enough apps and use cases being highlighted or being developed. So one of the things that I love about Proof of Talk is that there are a lot of practical use cases that will be discussed, and also actionable advice on how to push forward with the infrastructure we do have. So that's a very interesting topic. And as we transition to AI, there's a lot of talk about AI and blockchain together. So we can start with you on this, actually, Stephan, and then we'll transition back to Hugo. What kind of use cases do you think can spawn with AI and blockchain?
That's okay. A little bit outside of my usual sweet spot. So those are really personal views here. I think what AI really can do when combined with let's say blockchain technology and everything that's going on in crypto and Web3 is the following. AI actually, and I'm enthusiastic about it, but with a grain of salt, because what AI does is it's automation. It's automation of processing information and finding patterns that a human couldn't find, basically. And if you look at that, then the crypto Web3 space, blockchain, is prone to use cases for that, because all the transactions that are ongoing in our space create vast amounts of data about transactions, data about relationships, and even in a privacy conform manner, right? So it's basically looking at the behavior of a lot of people without knowing actually who is who, which is nice. But still, it gives you patterns. And if I go out and I look for data in a blockchain explorer, I try to extract something, that I do some analysis on that. That's pretty nice, but I guess AI can do a lot of that stuff faster, better, more targeted, and will find even more conclusions than I ever can. So if we use that technology in the right way and let's say create the right prompts, I mean, that's not technically the right thing, basically give the AI tools the right data, and then telling them in a meaningful way what to look for, we will come, I think, to conclusions and to insights that we cannot even dream of right now. So yeah, I mean, we can paint a nice and rosy world. I actually don't know what we will get out of that, but it's very interesting, even for trading data, right? I mean, what is trading about? I mean, we see it in the crypto world with technical analysis. You try to find patterns, but are those patterns really right? Is that something that we just see there, like a Rorschach test, which is stupid actually? Or is that really something where you have causality? So looking for causality and correlation is really something which AI can help with, right? And then the relational analyses, seeing how the flows are, seeing that in more or less real time or in near time, compared to in the current world, we get the data like 2 years later when some PhD students did some analysis about it. I'm over exaggerating the point here, and nothing against PhD students. But we will get more and more near time. We will get more and more to real time insights, to checking whether even our investment decisions are right, to what extent, what is the likelihood that we will do the right thing, and especially this thing which, from my point of view in the AI world, hardly anyone looks at right now, is actually, is there causality or just correlation? And for me, as I mean, I'm not a scientist, but I've been brought up in a way of looking for that stuff. Not for science, but the scientific way of thinking, which means you come up with a theory, you test it with real data, and if it's right, then it's okay, but it still can be falsified later. And progress is actually a sequence of falsifying your theories and adjusting them. This is what AI can support with in the crypto and Web3 space by far, because it's all about data, it's all about information, and it's all about the relationship between the points of information we have. So it's vast, I would say, and sorry for that, it's not very specific, because in a way, I think everything we see is just a peak to, or we're just looking at what might be possible, and we haven't gone into real use cases. Right now, it's used, from my point of view, for use cases that are nice. We can earn money with it, but they are not really adding a lot to humanity right now. But the technology itself has the absolute potential to do that at a later stage. I guess Hugo will have to say more about this as our more AI expert here, but that's my 2 cents on the matter.
Thank you for that. I think it's, it was a very interesting analysis, and that it'll most definitely be more efficient in analyzing data, faster, better, more targeted, as you said before. And we're just now scratching the surface of what's possible here. What I really find interesting is, the correlate or the kind of relationship between blockchain and AI as we come into this era where we're not sure what's real, what's not real, and that's the authentication power of blockchain. But also, as you mentioned, for trading, I just came from a conference where they were discussing, trading and AI, and you're certainly right. It can find patterns that the human eye could never, or the human could never possibly dream of coming to that conclusion, especially with the efficiency that it does and how fast it can process. I mean, in the milliseconds. So I think it's a very interesting tool for processing data that could be used for trading as well as many other things. As you said, it takes a very long time for research data to be compiled and for conclusions to be made. And we'll certainly be able to move a lot faster with the help of AI that has the power to revolutionize the space as we know it. So yeah, that was a very interesting analysis. And Hugo, I'd love to get more insight from you, and also on the importance of the decentralization of that AI within the crypto space as well.
Mm-hmm. So we've spent like the last, while in crypto just thinking about blockchains being used as a financial tools, and it's taken off somewhat, and I think it'll take off a lot further. But I actually think there is an opportunity for AI to be a far grander use case than the financial use case in crypto. Now, there's an awful lot of AI sort of memes out there. There's a lot of people talking about like decentralized AGI, artificial general intelligence, and there's a lot of, I mean, there's a lot of nonsense out there, to be completely honest with you, and there's a lot of great projects. I am not a believer in the infrastructure side of blockchain being like a better infrastructure for AI, because I'm also aware that the world has, fairly fixed amounts of energy. And frankly, the best way to train an AI is in a super optimized, um, global data center run by a massive company that has the budget to optimize that data center to the absolute lowest possible energy consumption. And if the future is AI focused, then I'm much, their consumption of energy will be very, very much higher than they are today, especially within the training. They're talking about $10 billion to train $10 billion of what is essentially energy consumption to train the next ChatGPT model. So imagine that, imagine that scaling exponentially, and then imagine applying that to a DePIN network, which is where each device is suboptimal in terms of energy consumption. I think I see a problem there, although I've seen the narrative evolving. Where I think blockchains are incredibly interesting is what you can do once you've got a model. Um, we've been working, we've released paper on something we call consensus learning, and this sort of fits into, what is the optimal use for blockchain when it comes to AI? Obviously, you've got AI payment agents. AIs paying each other, AIs across blockchain. It sort of almost seems natural because AIs currently cannot start a bank account. But there's like far more interesting, deeper things you can do in AI. Um, Consensus learning is really about how do you get a model that is more robust? And some of the issues in artificial intelligence is, if you think about a model, some company has some data, wants to train a model. Even it doesn't matter how big that company is. It can be Google. They still have a limited number of engineers. They still have a limited amount of data. They can only get that data from certain places legally. And sure, we've seen some perhaps uh, even today, I think there's a story, which I'm not sure is real, about something to do with Scarlett Johansson and the harvesting of her voice patterns. I don't know if that's a joke or whether it's real, but either way, it's a possible thing. Um, and where you really end up is a company that trains an AI model is very limited in what it can do. But there are types of AI model, especially when you move into a type of AI called ensemble learning, where you can get lots of, and ensemble learning is classically done in a centralized way, where you can get lots of models and you can aggregate their outputs for a given input. And you can weight their outputs. You can essentially find an optimization of the set of their outputs that gets you a better outcome for a given input than any one of the single models. And this is sort of harks back to, the wisdom of crowds. It's why we have a jury system, actually. Um, in well, at least in Western countries. And there's a sort of type of AI model that replicates that kind of idea that one person can be fallible, but if you get a bunch of people together, on the whole, they tend to aggregate around the correct answer. And blockchains are incredibly useful for that. But if you go further than that, each of those models that is being operated on a blockchain can be trained in private, and only the outputs put into the blockchain. By training it in private and by keeping the model private, it means that you can access data that even Google can't access. It means that someone like, a hospital network or a government healthcare um, uh, facility can train a model, provide outputs without exposing any of that sensitive data. They're not going to send that data to Google so Google can process it, but they can train their own model on it. And what that means is that suddenly you can train models on, by keeping it private, by keeping the actual model and the underlying data private, and by getting contributions from people that have data that cannot be exposed publicly. It means you can train models on way, 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 way more interesting data. Just to take a real simple example of why this is interesting. Let's say you want a self-driving machine learning model. You have BMW, you have Mercedes, you have Tesla. Now, Tesla have trained their models perhaps more heavily on American roads because that's where they have video data. BMW, perhaps, again, maybe in European roads. Mercedes, absolute huge presence in Asia. They can train their models based on their video output from Asia. Now, separately, you would have an AI that is really good in US roads. You'd have an AI that's really good on European roads, and you'd have a really good AI for models for Chinese roads. But together, if you can come to consensus over a given input across those models, you can have a global self-driving model. And this, whilst Tesla, whilst Mercedes, whilst BMW keep their model private, keep their underlying data private, don't lose intellectual property, and benefit collectively from having a substantially better overall model. So that's the idea of what we're doing in AI.
Wow, that is a very big idea and certainly really necessary for all the reasons that you gave. I think it's really interesting for, as you said, healthcare models as well. And when people don't want that data to be exposed, to all the other companies, they keep their data private, but it's also personalized. So that is super important as well, because what I've been understanding and learning in the AI space and from big AI players is that a lot of it is highly based on American standards and on American input. So it's really important what you're saying, that each of the AI models are trained individually to correspond with, the areas or the parts of the world where they are serving. So those are all
Absolutely. To
super.
give you a real simple example of that, let's say you have a patient that comes from a place in the world where diabetes is more common. Um, and I know that that patient comes from there, then I can select only the nodes within a network that are in that region that will have data that is localized to that region based on the particular characteristics of the patient. I can discard the nodes from let's say the US or the Europe or Russia, and I can only focus on say Southeast Asia where diabetes is a much more prevalent thing, and that gives you a lot of power in the model.
Oh yeah, and some of the information that I've been getting, kind of like an AI masterclass, is I'm based here in Europe in Spain, and we have a company called NextGen based here as well that NVIDIA called kind of the core weave of Europe. Only their mission is to decentralize AI and make sure that that gets distributed as it should. And I was also explained this very exact same thing that you're talking about, that we can get those individually trained models without compromising the data and without having to privacy, essentially. So what that could do is massive. And I think you're completely right about there being much deeper use cases for AI than what we're seeing now. And we're just getting to the scratching the surface, as I said before. And I love what you said about the wisdom of crowds and the jury system, and that one person can be fallible, but when you get that system together in a consensus mechanism, it's very interesting going forward. So I think, what do you think about, as the final question on AI, how far are we from developing those kind of models? Do you think that's going to happen in the next couple years, end of decade? Like, everybody's excited about AI and blockchain, but how far out really are we from developing these meaningful models?
Well, I'm happy to take that first. I mean, it depends what you're talking about, meaningful. I think artificial general intelligence is still a ways out. Uh, um, People talk about ChatGPT and things like approaching artificial general intelligence. I'm fundamentally not so sold on that. But that's a very long discussion. But I think, uh, there are really meaningful models in AI already. But I think, especially if you take the self-driving use case, that practically works, but it has really unpleasant edge cases. And if you can just make the models more robust by essentially aggregating more data without, one of the things that's very big in crypto AI is like AI marketplaces. I'm very skeptical of AI marketplaces because people that with useful data, on the whole, they really don't want to sell it. It's usually either highly private, so you can't sell it, or it's very important to the particular business that holds it, and they don't want to sell it to Google. They don't want to license it to Google or any other AI player. Uh, but what you can do with consensus learning is it allows you essentially to harness that data without losing control of it. So I'd say, like, can, I'd say you could start seeing, at least consensus learning models, relatively soon. I think, there are further aspects in privacy, which, one of the great things about crypto is the kind of the ZK revolution and the fully homomorphic encryption revolution. It's given an awful lot of funding to researchers in this area. And actually that, if you take it even away from crypto and you apply it back to just conventional systems, that's incredibly valuable for the development of AI.
Yeah, absolutely. I love the consensus learning to harness the data without losing control of it. I mean, that's huge. And I like all the points you pointed out about this. Stefan, I would love to transition to your thoughts.
Yes. Okay. I'm turning a little bit more philosophical here. Not because it's uninteresting, but because it is interesting. So there is one definition of truth. Truth is a correct answer to a meaningful question. I let that sink in. You all can think about that. It's pretty interesting to think about it like this. So, and with that, will AI give us correct answers to meaningful questions? So the holy grail is asking the meaningful questions, and then getting the correct answers. I guess everything Hugo talked about is exactly about getting those correct answers. How can we combine private and public data? How can it be even combined, right, for those two sources? How can we do something like, I would say, anonymous or pseudonymous training of AI models, right? So which is pretty close to what we see in crypto and what crypto was built about. And I think AI can deliver a lot of stuff around this. And the better the questions we ask, the more meaningful those questions are, the faster we will get to it. Unfortunately, and it's not to play the devil's advocate, and it's all rightful. I mean, if there is a business imperative, if I can earn money with it, it's nothing where I say we should ban it. But it's actually interesting for what type of use cases AI is used nowadays, where I would say it's interesting to see the proof of concept, but it hasn't been actually a meaningful question. I mean, actually automating my Excel spreadsheets, it's nice and we should do it, but it's not a meaningful question in the end. It can be correct, it's all okay, but it's really about what Hugo said, the questions that will come next, and even the questions that come after the next questions. I guess that's really it. So I see the real impact of AI will take a little bit longer. Look at crypto, it's the same. I mean, when Bitcoin originally, when you see when the white paper was issued for Bitcoin, I mean, until now, that's basically decades, right? And in AI, it will be the same. You might have the exponential curve, but the problem that is going to be solved is exponentially more difficult than the one even that we try to answer with the DLT, the distributed ledger technology / blockchain, and everything that came thereafter. So we will still, it will still take some time until we see the real meaningful questions being answered in the correct way, from my point of view. That doesn't mean I'm not invested into it, but I have a long-term horizon for that.
Oh, absolutely. I love that. I'm so excited for the future of AI and it's all of its use cases. You know, we've been saying we're just at the beginning. Those meaningful questions are coming, and asking the right questions, as you said, toward really revolutionizing society. It's obviously going to make our day-to-day easier. Our skills are going to be enhanced, and our productiveness also. But how can we use this in these deeper meanings? And we're already starting to do that, and it's just going to evolve and potentially exponentially over the years as we continue to develop this technology. So I'm super excited about what's happening. And for closing thoughts, just to end the spaces on kind of a high note here, as we're coming into this next phase of the bull run, and Ethereum could be on the brink of getting approved for its ETF. What are your guys' kind of predictions or thoughts for this cycle? What's going to happen? How is it going to play out? What do you see being the major narratives going forward?
Okay, I'll start here as the exchange guy. For me, I see a lot of potential around, especially Bitcoin and the main coins, towards the end of Q3 and in Q4. Why? We will see macro environment kicking in. So now, yes, I totally agree to the ETF thing, which is a short-term thing, but then the news cycle will be over. macro terms, I expect quantitative easing later this year around the election time in the US and after the election time, because before there will be promises, afterwards they will need to make sure that the voters will be appeased. So this will lead to more spending, especially in US dollar, which usually is on a macro level a fueling ingredient for the crypto world, for matters we have discussed earlier. So I'm pretty optimistic there. I mean, no investment advice, but you can now see how I'm positioned in the market. And until that, I will trade the news cycle. Long term, I'm really optimistic, but I recommend basically, if you're invested into the space, you need to know why you do it, and you need to see the use case, right? So when I look back at the last cycle, money was just thrown at people who could say something like Bitcoin or crypto or blockchain. I mean, a little bit now we have the AI scheme of things, but as we go more professional, look at really what's behind it. It can be quite a lot of things. So, for example, and this I want to still weave into the discussion. If you look at the Solana ecosystem, it enables all those meme coins, and you might say meme coins are just scam. I don't think so. I think it's more like a fast fashion equivalent in the crypto world. It's more a consumer product, and I mean that not in a negative way. I mean that in a positive way. It is really something that is not like a financial asset or a stock or a reserve asset as Bitcoin. It's more like a community asset that is driven by the demand and the contribution of that particular community. And it can change quite quickly. And it works because the Solana ecosystem is quite efficient. So it's low cost. So we had NFTs on Ethereum. Now we have the meme coins on Solana, which is actually a nice development as well. We will see more of this. But if you go to the core layer ones, it just needs to be sure that they have a use case that basically no one else has, or only a limited number of others, and then you can invest. If not, it's very speculative. That's basically my outlook for at least, let's say, the end of this year. And I'm looking really for new projects, always on the real use case behind it and how they actually implement. Do they have a plan? Are they real? And is it more than just marketing?
Oh yeah, that was awesome. I agree with you here. It's election year. Politicians are going to want to appease voters. A lot of promises being made, and everything with quantitative easing, cutting rates, inevitable stimulus. Some thought it would happen as early as the summer, potentially, like you said, going into elections. It seems to be setting up the perfect storm for a whole new liquidity within this cycle. So yeah, I would agree that we are going into the next phase, and all the major coins, as you said, Bitcoin, Ethereum, and then potentially some focus on the new coins after that cycle. And also all the different trends that are coming up. The meme coins, I think, have also evolved this cycle into something different than last cycle as a form of community building. I liked your analogy of, NFTs on Ethereum, now meme coins on Solana. And yeah, it's been interesting to see how that has been evolving. So Hugo, we'd love to give your closing thoughts as well on what you think will happen this cycle.
So I don't really do predictions because I tend to find that things can turn on a dime based on completely exogenous events. So any prediction, can be blown out of the water tomorrow. That said, I'm pretty bullish on Bitcoin DeFi, meaning the emerging ecosystem around Bitcoin that is sort of very DeFi focused. I think it's something that we at Flare, identified a very long time ago and have been building towards, both with Bitcoin and other tokens that don't have smart contracts but have very large amounts of value, such as XRP. And so I think it's very encouraging for me to see the sort of renaissance of people building L2s around Bitcoin, people trying to build, the proper L2s that are leveraging Bitcoin security. We obviously are building trustless bridge for Bitcoin, and we'll also be looking to provide our pricing into those Bitcoin, the sort of emergent Bitcoin L2s. I think it's a very interesting area because Flare's much more in accordance with the traditional Bitcoin values than any other oracle out there. So I think the Bitcoin DeFi is kind of where I'm very interested in this year, and of course AI, but it's not a this year thing. It's the AI is building out AI within crypto is going to be a multi-year project for hundreds of different projects. I think we'll see some interesting use cases, maybe not use cases that catch on or hugely valuable, but we'll see some interesting use cases, by the end of the year. But I think AI is a very long-term thing.
Thank you. Yeah, I would agree. AI, there's quite some time before we will be developing use cases that are actually put into practice and that stick and that work. We'll see probably certainly a lot of AI infrastructure and coins coming out this cycle. But I love what you said about Bitcoin DeFi and about there being a lot of value on that chain. It's been kind of the year of innovation on Bitcoin. So I think that's also a very interesting perspective as well. And I'm just very much looking forward to following more about what's happening on Flare, and really, really appreciative of both of your insights, also from BitMEX, one of the longest standing exchanges, and also doing things very transparently, and one of the more responsible players, as you said, Hugo. So we really appreciate you both being here on behalf of Proof of Talk episode 3, leading up to the Proof of Talk event at the Louvre Palace in Paris on June 10th and 11th. We really hope to see you all there. And thank you again for being on today.
Thank you so much for having me.
It was a pleasure. See you all.
Thank you. Have a great day.
Well, there we have it, guys. I thought it was a pretty tame spaces, to be honest. No nuggets, but it's always great to hear Hugo speak, as I'm sure you will agree. Big love to those who made it all the way through. I quite enjoyed it, and I'm hoping that there's going to be some recordings of this Proof of Talk event, which again is happening in June, I think, 10th and the 11th. So stay tuned for that. And yeah, that's pretty much it, guys. Thank you all so much for watching. Again, please do feel free to like and subscribe if you haven't already. And have a great day, and I'll see you in the next one.